Basically, the takeaway is they're on fire. May and June were their two biggest buyer months in the history of the whole platform. They are clearly saying that their marketplace is doing very well.
StockX and GOAT, which Foot Locker put $100 million into, they are both what started out as sneaker consignment marketplaces, B2C, vertical specific marketplaces. Consignment being, you have third-party sellers saying, hey, I have really cool sneakers, and other people want to buy these sneakers. Even though sneakers are heavily consolidated on the manufacturing side of the supply chain, there is a lot of fragmented supply because you have so many people buying them retail and then reselling them. So you have your producers are these resellers buying them at retail for say $200 or $300, and then if you can get them, because there's so many limited releases and all these things, then you can sell them for $400 or $500, or many of them are much higher than that, or in the thousands of dollars. But none of them are retailing for $1,000. So there's a huge market for middlemen to buy low and then resell at a higher price. And that's essentially what StockX and GOAT have been doing. So StockX did this State of StockX report that just came out, and there's a full report which can go into more detail. But basically, the takeaway is they're on fire. This is not cheap stuff. I think one part of this is there's new and there's used. And so, you would say to yourself, none of this stuff is cheap. There might be discounts and deals to be had on here. But what they're saying is May and June were their two biggest buyer months in the history of the whole platform. And, they say here they've done $2.5 billion of GMV over their lifetime. Last year, we were reporting for 2019, they said they were on track to do $1 billion in GMV annually. They've basically done over 5 million transactions. They have 10 million lifetime sales, and over half of those in the past year. So 5 billion transactions in the past 12 months, I guess. Europe is growing for them here. So just really interesting to go deeper into the information here. So $500 is the average price paid for shoes. It's not cheap stuff, right? So this is certainly a more affluent demographic of shopper. Maybe it's just because these people don't have no other hobbies. There's no sports. You can't go out to restaurants and socialize and go out to clubs and nightlife, and you're just kind of stuck at home. So what do? You go on StockX and shop. I guarantee that's probably part of the uptick here, where a lot of this demand, a lot of this their consumer base has disposable income, haven't maybe been as negatively affected by COVID as less well-off consumers, right, that are not going to be looking to spend $500 on a pair of sneakers. The consumers are just captive consumers. They have nothing else to do but go shop on StockX. That's one theory I have. The other theory is that I do think people are clearing out their closets, and they do have a lot of extra time, and they are saying, hey, you know what? Let me sell this used stuff that I haven't worn or don't really want to wear anymore. And so I do think you are seeing a lot of used inventory come onto these consignment marketplaces. And then therefore, you probably do get some good deals. Again, still expensive. It's not like you're getting a $500 pair of shoes for $100, but you are getting good relative deals, because there is a lot of used inventory coming online on the supply side to these consignment marketplaces. So StockX and GOAT are both private, but Farfetch and The RealReal are the kind of more holistic luxury goods marketplaces, somewhat similar to them, but like designer shoes and handbags and these other kinds of, product lines. Whereas these two companies are really, they're now branching out into other stuff like watches. There are also watch marketplaces, which are very cool. And I think I've heard doing pretty well during COVID as well. Again, who's spending thousands or tens of thousands of dollars on a watch? probably that demographic is a little bit more insulated than others during these calamities going on. But anyway, Farfetch, I mean, they're down 6% today, but the whole stock market has just started to tank in the last few hours because I guess people have started to realize that there's crazy unemployment and the Fed is just artificially inflating stocks by going on crazy spending sprees. But whatever, that's besides the point. That said, now it's 5%, stock market's all over the place. But Farfetch and The RealReal, two public companies, Farfetch out of the UK, RealReal, the kind of US equivalent, smaller. RealReal stock is here, about $1 billion market cap. Anyway, you look at these companies over the past month. This is the past 6 months. RealReal got down to around $5 or $6 in mid-March. Farfetch got down to, they actually didn't really go down that much in mid-March. I mean, they went down a little bit, maybe into the $7 or $8 a share, but now they're up to about $21 a share. And so the interesting thing with both of these companies is StockX just came out with this information. They said May and June were our 2 best months ever. Now, this is a growing company, so you should hopefully want to see them having their best month ever is kind of like a repeat trend, right? That you should have huge growth, right? Like that, these companies are huge growth. You're doing $1 billion in GMV. You should be having huge growth anyway. But they are clearly saying that their marketplace is doing very well, even better than what they would have hoped to do if Corona hadn't happened, right? So what that leads me to say is, I wonder if the same or similar thing is happening to Farfetch and RealReal. And I would imagine that you probably got a pretty good chance that they would say something similar. It's not an exact corollary, but Etsy is, kind of like these craft-made goods. Etsy literally has tripled in its stock price in the past few months. So these kind of smaller boutique marketplaces that have kind of some new or like used craft good inventory, we're seeing them do very, very well. Partially because you can't go to retail stores, A, and B, you're able to maybe get a lot of this kind of extra used inventory or additional supply, which just helps that consumer demand transact. So my stock pick would be that when these companies release earnings, my guess is that they're going to have a pretty strong Q2, and that the stock market will reward them, assuming not everything has collapsed, and then I can't predict any of that. But everything else remaining equal, I think Farfetch and RealReal, relative to what one would expect their performance to be, will outperform. And I think you're seeing that in StockX's numbers and some other pockets of certain types of product marketplaces. I mean, even if you include Amazon, that Amazon stock's over $3,000 a share. I mean, Amazon's also been doing extremely well, just given how big they already are and the scale that they operate. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.